Welcome to Sophie Daddy's channel. All right, let's dive right in. We're talking about the world of quants, the quantitative analysts who are basically searching for truth in what is, let's be honest, total market chaos. You can think of it like a quest. They're on a hunt for that one pure, clean signal that can hint at where the market is going next. And their weapon of choice? A really powerful set of tools called filters.
So here's how we're going to break it all down. First, we'll tackle the main problem, the constant battle between signal and noise. Then, we'll get into the actual tools of the trade, starting with the basics and working our way up to the really advanced stuff. We'll even touch on the machine learning frontier, which is super exciting. And we'll wrap it all up by talking about how you actually pick the right tool for the right job.
Okay, first up, signal versus noise. Look, every single quant strategy, I don't care how complex it is, it all boils down to this one fundamental challenge: figuring out what actually matters versus what's just, well, random junk.
And this slide just lays it out perfectly, right? On one side, you've got the signal. This is the big stuff, the real, durable economic forces, things like a major policy shift or some brand new, game-changing technology. And on the other side, all the noise. Just a constant barrage of market chatter, daily headlines, wild predictions, you know the drill.
Which brings us to this really important idea, the signal-to-noise ratio, or SNR. The best way to think about it is like you're trying to find your favorite song on an old-school radio during a massive thunderstorm. The song? That's your signal. All that crackling static, that's the noise. And let me tell you, financial markets are like a Category 5 hurricane of static.
So yeah, how on earth do you find that signal when it's buried in all that noise? I mean, that's the multi-trillion-dollar question, isn't it? Well, for a quant, the answer isn't magic, it's math. It's a powerful set of tools designed to do one thing: turn down the static and crank up the music. And these tools, they're called filters.
All right, let's pop open that toolkit, shall we? We're starting with the basics, the bread and butter tools that every quant has to master to start cleaning up all that messy data.
And here's the first one out of the bag, the moving average, or MA. Honestly, it's probably the most intuitive filter there is. Its whole job is to just smooth things out. It takes all those wild, jumpy price swings and averages them together to give you a much clearer, smoother picture of the underlying trend. But right away, you hit this massive, unavoidable trade-off. If you use a longer period MA, yeah, you get this beautiful, smooth line that filters out tons of noise. But it's slow. It lags behind the real price, so your signals are delayed. Go for a shorter period MA, and sure, it's way more responsive, but now you're at risk of getting whipsawed by every little bit of noise, giving you a ton of false signals. So what do you want? Smooth and slow, or fast and potentially false? That's the dilemma.
And this is where it gets really practical. This is how you turn those squiggly lines into actual trading signals. When the short-term, faster average crosses above the long-term, slower one, that's famously called a golden cross. It's a classic bullish signal. And when it crosses below, that's a death cross, a bearish one. See? We're literally turning a smooth line into an idea you can act on.
But, simple smoothing will only get you so far. The quest for a really pure signal means you need some bigger guns. So let's level up the toolkit.
And this quote right here is so important because it captures a huge shift in mindset. We're moving beyond just smoothing out past data. With advanced filters, we're talking about building and testing an actual model of reality. It's not just about what happened, it's about trying to understand how it's happening.
And that brings us to this two-step dance, which is the absolute core of one of the most powerful filters out there, the Kalman filter. The best analogy is a self-correcting GPS. First, it uses its internal map, its model, to predict where the true price should be. Then it gets a new piece of real-world data, and it updates its position, correcting for any error. It's this constant loop of predict, then update, that lets it zero in on the hidden truth over time. So this table really puts it all into perspective. Each filter is a specialized tool for a specific job. Moving averages? Simple, but they lag. The Kalman filter? Super adaptive for finding hidden patterns, but it makes some pretty big assumptions about the noise. The Butterworth is great for low-lag smoothing, but it can be a real pain to set up. And the Hodrick Prescott? Great for economists, but totally useless for live trading because it basically peeks into the future. The takeaway here is huge. There is no one best filter. It's all about picking the right weapon for the specific fight you're in.
Okay, so we've gone through the classical arsenal, from simple averages all the way to complex statistical models. But what happens now? What's the next frontier? Well, this is where our whole quest for the signal smashes right into the revolutionary world of artificial intelligence. And what's happening is actually brilliant.
Instead of just throwing raw, messy, noisy data at a machine learning model and hoping for the best, quants are getting way smarter. They're using those classical filters we just talked about to first clean up and distill the information. So the output from, say, a Kalman filter becomes an input for the AI. You're essentially giving the AI a massive head start by feeding it smarter data to begin with.
And this is a totally different way of thinking. With the classical approach, a human, the quant, decides on the model. They basically say, okay, I think the market works like this, and they build a filter based on that assumption. With deep learning, it's kind of the other way around. The machine discovers the best way to separate signal from noise all on its own, directly from the data. The human builds the architecture, but the machine learns how to see.
And these are some of the crazy advanced models that are leading this charge. Things like denoising autoencoders and diffusion models, they're not just smoothing a line. They're literally learning what a clean signal looks and feels like in financial data so they can actually reconstruct it from the noisy mess.
So, we've seen this incredible arsenal of tools, from the simple to the downright futuristic. But that brings us to the most practical question of all. How in the world do you choose which one to use?
Of course, everyone always asks, so what's the best filter? And let me just say, if anyone gives you one single answer to that question, you should probably be a little suspicious. The real answer, as you've probably guessed by now, is it depends.
The best filter is all about what you're trying to do. Just looking for a simple trend? An exponential moving average is a fantastic place to start. Are you modeling something specific, like a pairs trading strategy? The Kalman filter is your guy. It's literally built for that. Want that nice balance of low lag and good smoothing? Check out a Butterworth filter. And if you're dealing with mountains of data and looking for super complex patterns, well, that's when you bring in the deep learning big guns.
And that really leaves us with this one final massive question for the future. As AI gets more and more powerful, what will the ultimate signal filter look like? Will it be something designed by a brilliant human, based on a deep, intuitive understanding of how markets work? Or will it be something a machine discovers on its own? A pattern hidden so deep in the data that no human could ever have possibly seen it. The answer to that is going to define the next generation of finance.
All right, the learning doesn't have to stop here. If you want to explore even more, I've built the perfect place for you at sophie-ai-finance.com to unlock a new way of learning. Think of it as your personal learning toolkit. If you just want the big picture, you can watch the video or listen to the podcast. It's perfect for getting the main concepts down while you're on the go. But if sometimes you need to hit the pause button and really let an idea sink in, you can visit the blog article. It has all the details, charts, and text from our discussion so you can review everything at your own pace. And for those of you who want to see all the math, data, and the complete nitty-gritty behind the analysis, well, I've got a full research paper waiting for you, so you can really dig into the details and see how everything works under the hood. It's all there, all for you. And hey, if you have any ideas for new topics about finance and AI you'd like me to cover, please leave me a message. Thanks for tuning in, and I'll see you in the next video.